All right, guys. Where's my water? Hold on. All right. Feels so much better. Today, pretty much is Monday. You can see that down here. Monday, January 29th. Basically, there's pretty much no news at all for today. So today's like a no trading day for me. That's kind of why I'm tape reading here. Hold on, let me turn off my screen real quick. I'm gonna pull up my live stream right here, and then I'm gonna pull up the forex.com so I can show y'all guys. So yeah, let's see. I don't want to. Okay. All right. So forex.com here, you can see pretty much what. No news Monday today. Tomorrow's there's pretty much news. I'm gonna be seeing if I can trade that. If not, then of course I'm not gonna try to force anything. Wednesday after FOMC. Thursday probably. I'm gonna see. Thursday's like a 50-50 for me. Tuesday, it's like for me, Tuesday's like a 30-90 basically. A 30% trading, or 30-70, 30% trading, 70% not. This one's a 50-50 because it's before NFP, but has a bunch of news for GPP, so I'm gonna be watching that. But nonetheless, here we can see pretty much we had a 15-minute sweep, and then eventually we formed that market maker buy model, and then we started rallying up. Or you can see like an AMD here somewhere, the accumulation manipulation down here, and then the distribution. Or you can use standard deviation projections to have this target already marked out. Because if you go to the 1 hour here, you could have probably already known that we're gonna rally up using this right here. Standard deviation projection right here. Boom. This is the area I want to reach pretty much for this week. I can see it being hit very soon, so I'm going to be watching to see that. Or is this lag right here? This lag to that high. It's a manipulation lag. Took out these lows and took out this low. It created a new expansion lag. So you can use that right there and project that. Of course. So no, yeah, I've been AFK, I won't lie. I haven't posted a lot of videos, but I'm currently on a 10K account challenge, and I'm up percent. I'm risking 2% per trade idea, so it's because I have a model, and like my model presents itself once a week, if not at most 3 times a week. That's kind of why I'm tape reading today. I don't want to force anything. Even though I can't trade these conditions, I won't lie. You can see this right here. What is this? A breaker block. So you can trade this right here. But again, my model isn't this, so. And then if you measure the dealing range here, we're in pretty much inside of a discount. So buys would be optimal, but we're not, we're not below midnight opening here, so it doesn't really seem as high probability because we've been above it, come back down, chop, then above it, and now we're coming back down. So you can see like this price move all right here is being repeated during New York. It's not really high probability today, in my opinion. I feel like we're just gonna go back and forth. Let me put some music on because I know y'all can't. Let me turn this music down. Yeah. I'll turn it down like that. Alright, yes, we can see that now pretty much clearly. Forming a SIBI here. So, again, we're inside of a discount. I want to see if we can continue to rally back up now. But the candles, you can see all the candles here are just really, really bad with the wicks. I'm gonna move this over here. I want to see this here. Alright. Is the music too loud? I feel like the music might be a little too loud. Nah, it's probably not too loud. I feel like my microphone is too loud. ever since I moved it, but nonetheless, it is what it is, you know. Dow Jones, we're rallying. Look at Dow Jones. Dow Jones is like beautiful to me. Or YM. SPX, I feel like we're just chopping. This is always like this. I don't know why. That never saves the freaking chart. Here like that. USD CAD. Look at that, it's pumping up to the moon. Dixie's trying to follow. These are trying to follow. Euro USD again is going down lower as I would anticipate. And then here, Dow Jones, boom, boom, boom. And then yeah, now we're watching to see, if we have any SMT. NQ is the one that's forming SMT currently. These two are just going up to the moon, while NQ has already been dropping. So that is telling me something. Either this is going to break the correlation and then eventually this is going to catch up, or this is the 6 sister and it's going to be lagging and this one needs to catch up and continue higher. So I'm just going to wait for more confirmation now at this point. There's no point of not waiting. Again here, 10 o'clock. It seems like a clear market maker style model here forming, but you went into too early on the smart money reversal. You want to have that higher time frame PD array, telling you, giving you confirmation. We're going to go to one chart here and we're going to go to the 4 hour. So we bounce off of this 4 hour confluence. For me, we see the 1 hour target. That 1 hour buy side liquidity is a target indeed. We have 2 down close candles here, so this could be your institutional sponsorship to push us higher. 15-minute time frame, we don't have anything there, but we can measure the Dylan range here. You can see what we are inside of a premium and would want to come down into a discount. Again, if we measure this right here with the mean threshold, that aligns perfectly inside of a discount, so we can see that be hit and then eventually rally and continue up. I wouldn't be against that at all. So that is really what I'm watching. See if we can get that rally back up. 5-minute time frame. We don't have anything either on the 5-minute, but we can see a little fractal market maker buy model here forming. Yeah. Alright, so that's really it. Nothing really too favorable for me, honestly, here to even trade this today. I don't even plan on trading today. I just want to tape read, and I want to actually start implementing what I'm learning or like reviewing. I'm planning on getting a commonplace book, but I needed a rough draft at first of trading, like all the concepts that I've learned. So like, first table of contents times price. I don't even plan on posting this book or like selling it. I think it's pointless, but it's for me commonplace book where I can review it. It's because my notes, like, they're all over the place. I won't lie, and I just want to organize them. I want to have like certain sections for liquidity, certain sections for institutional sponsorship, certain sections for price delivery, certain sections for standard deviation, certain sections for market maker X, certain sections for AMD. Just having those different sections, like reviewing them, and like having one that's like a base overview of everything. And then at the end of my commonplace book, I can have my trading model and what I look for in my rules and pretty much what markets favor me, and just like reviewing all the data from all the funded accounts I've traded and like seeing which markets favor me most and which ones I have the highest win rate, what days I have the highest win rate, and all this other stuff. Just like that's what I plan on doing, like digging deep into my trading and understanding a lot. That's pretty much really it. There's nothing else to it other than that. So yeah, no, you can see NQ is dropping. We are about to reach that low down here, basically. So that means ES and Dow Jones are eventually about to catch up, in my opinion. Seems like it, because if ES doesn't respect this mean threshold of this breaker in the discount, to me that just seems like we're just going to continue to this price lag lower. I don't think there's any confluence for me on the other time frames here on the 4 hours. Nothing here really. That's a bunch of wicks. 1 hour time frame, a SIBI there, we're hitting it probably. So it's really just like low probability for me. 15-minute time frame again. With that 1 hour time frame, again, we're having that order block with the mean threshold. It kind of is a propulsion block since it's inside of this order block here, or a mitigation block. And yeah, pretty much really it. And then on the 1 minute time frame here, so I'm gonna make them a different color. Make the SIBI a red. I'm gonna label it SIBI. There you go. It's a light red. You see that? I like that. So yeah, pretty much really it. I'm gonna be tape reading this one. This one seems a lot more favorable. Again, we have another SIBI here. I would like this to become inversed, even though I would prefer the close above here too. So to make it a change in the state of delivery right here, with a inversion, so that would be another change in the state of delivery with this. So that would be double change in the state of delivery. I've been trying to use the order blocks as change in the state of delivery so I can get a little bit earlier into my model, but I don't know, I think I just like inversion for Valley Gap so much. But I'm gonna try to use the order blocks. Sometimes I don't wait for the market structure shift, and I wait for the inversion for Valley Gap to give me an entry. But I'm trying to, use my order block methodology of the order blocks and use that, of course. But nonetheless, I'm also trying to use a little bit more of the SMT. So NQ is the one that's lagging. The other one's rallied back up. Let's watch NQ here now. NQ took out these lows down here, these prominent lows. NQ took them out. We have another fair value gap right here that we are currently inside of and made an inverse. So to me, that seems like a prominent market maker sell model here. I mean, a market maker buy model, and this would probably have to be, might be a smart money reversal if NQ starts to rally up and these continue to go to the upside. Okay, yeah, no, not really. We're gonna watch to see if this holds right here. This rejection block with the consequent encroachment. If we do get down there, of course. If not, then make this down close candle a order block and respect it after. What I'm watching here, yep. So yeah, let's wait to see if we can get that changing the state of delivery there again. Not really changing steadily since we already had that with the inverse. Then this one's starting to catch back up with the mitigation block here. Damn, my screen, bro, like my screen has been going black and white. Not black, but it's just like been cutting out. I don't know what's wrong with my graphics card. I need to open up my PC and just like fix that or update my drivers or something. Shit is mad weird. There's nothing like I can do right now. So yeah, we're just pumping up now. This is around like 8 points. Not bad, not bad. Damn, why is it like, you see that? Bro, I'm gonna have to update my drivers. I'm sorry guys, I'm about to update that. I'm about to see what's wrong really. There we go. I think it should be good now. Alright. Let me close that out. Alright, I think it should be good now, honestly. Hopefully the screen doesn't bug out anymore, So I think I fixed it now with NVIDIA. I got a 3070 in my graphics card slot right now, so I don't know why it's doing this. Hopefully that fixed it up. Enable G-Sync. Alright, so here we have a breakaway gap, and pretty much that is telling us a story. Again, here we see a market maker buy model with the market maker sell model here to the sell side to the curve, and then buy side to the curve. Again, here these inverse arrays want to get respected and continue us higher. All of this right here, but again, here this is all high resistance liquidity. We can just see, took out this high, came back down lower. We didn't take out the lows, rallied back up, failure swings, inside of there. That's what I classify as low resistance liquidity. We aren't breaking these lows and we aren't continuing lower. We're just inside of a range, injection volatility. God, Lee, why is it like that? Bro, I don't know why it's like that. Is my microphone bugging? I don't know why it's like this, bro. Everything's like scuffed right now. I won't even lie. All right. So here again, what do we have? Down close candle, pushing us higher. Inverse array was respected. For me, we are inside of a premium, so I'm going to watch to see if these premium arrays, and again, we disrespected equilibrium, so to me that seems like we're going to respect this market maker buy model and we're going to complete it. If not, we're going to have trouble getting up above here and then eventually rallying up. ES again made this inverse, made that change in the state of delivery occur, retraced, now we're rallying back up. We're about to take out this liquidity here, so I'm going to take this off, and eventually NQ is having that beautiful prominent market maker buy model there for him. To me, no trades, because I said I was going to tape read. I'm going to sit on my hands, so I might as well not trade. I'm going to be a man of my word. My model, it won't present itself today, so there's no possibility of that trading experience to occur. I'd rather wait for the injection of volatility and give me the movement as fast as I like. Here the trade would have been taken probably around here, because we swept lows, we had that change in the state of delivery. SMT was telling us what either NQ was lagging behind or the other ones were going to drop, and NQ was the sure one to lag behind because these continued higher, respecting bullish PD arrays, disrespecting bearish ones, and that just told me a sign. Again, here I would want to see this hold. There's no point of not these two PD arrays holding. That's two PD arrays. This is a breakaway gap. I don't want to see us revisit this. I want to see mean threshold of this at least get closed above. So that's pretty much what I'm watching here, honestly. There's no point of this not holding right now. NQ is probably the most favorable one right now, honestly, out of every single NC. And I was looking at all these markets here, but I told myself, like, why am I gonna focus on so many markets when I don't even trade them? That's the real deal. I don't even trade. Which ones I don't trade? I don't usually trade USD JPY. I don't trade silver, UK oil, US oil, and crypto. I just have it there because that is more of a long-term play for me. USD Swissy, not high win rate. USD CAD, 50-50 really, and then AUD USD, not a high win rate. GBP, high win rate. Euro, high win rate. All these right here have a really high win rate. That's really the main reason why. We did close above that mean threshold. Now I'm gonna want to see what this close above here. I want to see this continuing higher. There's no point of us coming back down now. We can revisit this mean threshold once more and then eventually rally back up and then create another order block inside of this one, so that would be a propulsion block, and then we would continue higher. But nonetheless, I just don't see this one. Was a market I was watching for a while, but nonetheless, you can see we didn't respect this breaker first and foremost. We didn't have that market structure shift, so to me that's telling me like this market is in high probability in my opinion. We did have we had a balanced price range here, a triple balanced price range, and you can see we tapped up into it, then we eventually closed, and then eventually we formed that change in the state of delivery there with that order block. And then we had a market structure shift, creating big displacement. So I would probably want to see us retrace back up into a premium of this zone right here and create a fair value gap or a SIBI, and then have an overlapping PD array there with the market structure shift. We retrace back up into at least a premium, or we wick into a premium, then we close back down here, and then we start dropping on the 1 hour time frame. Or you can look on something on the 5 minute, again, a change in the state of delivery, or like an inverse PD array there form when we're tapping back up into that 1 hour SIBI if we do form one in 43 minutes. So I'm going to be watching to see that. This is all for me a beautiful market maker sell model. We're tapping into that daily fair value gap there. To me, this is like a A+ model, A+ play. That's my model, pretty much 3 PD arrays, 3 different time frames. And yeah, that's pretty much really it. I'm probably going to go more in depth about it later on, whenever I'm starting the scale. I told myself, I'm gonna continue to strive and tape read and like be better, at trading. and review the concepts. I do plan on getting a commonplace book. That's one thing I had to get, bro. I gotta rough draft it though. I need to make digital copies and rough draft. So we have a small fair value up here. Enough of my rambling. We have a small fair value up there. Mean threshold can be hit again once more. Boy, my mic is like. You hear it like that? Is it really my microphone? Bro, why is my mic like that? I'm about to probably fix my audio settings and everything, but I'm about to like just get a new PC. I'm about to start live streaming on a laptop or something, bro. I'm gonna just get a laptop and start live streaming on there, like ICT. Just like leave all these monitors to my PC alone. It's clearly bugging out, we're having black screens here and there, you see that? Even when I'm recording, I have it. Or whenever I'm like not even recording. Sometimes I usually have it, but it's usually when I'm streaming or recording. It's probably something with my graphics card for sure, but I gotta go and find out why. Let's see what's going on. I did swap it though. I had an AMD graphics card, not AMD, RTX. No, not RTX. Damn, I forgot. RX 5700 XT, I think so. That's what I had. Then I got a 3070 and shit. Alright, so we have another institutional sponsorship order block there. I would want to see what get close above, rally higher. If not, we don't close above this crushment of this wick right here. Of course. Sure. That would be good enough for me, If not, then I'm looking to see, this fair value gap at least hold. For sure. Dun, dun. Dun, dun. So we're still yet to get above here. I'm watching to see that. Again here, this is like all of this to me not right there. No, not even right here. It's not even a balanced price range. I feel like this would be a balanced price range because it's a breaker. This two right here, since we swept the lows and we rallied above, that would be a balanced price range. I guess that's kind of why we didn't have strong delivery below it. Well, we had some delivery below it, but not too much delivery below it, of course. Again, this all could be your accumulation for an AMD model. All this right here. And yeah, anything below that would be your manipulation. So it occurred twice. It's a low probability day, and then eventually you had your distribution all the way up here, pretty much your AMD. But I would prefer using midnight and then eventually the sessions too with Asia session. But you can see Asia was very choppy. London was just a very big expansion. Alright, so we're retracing back. This is totally normal in my opinion. As long as we hold this and this right here and the fair value gap, to me that's a high confluence. I would prefer not to see, the mean threshold to get close below. To me, that would be kind of like breaking the 3 PD arrays, because I can see this being close below too, since it's not too big, especially with this right here. But nonetheless, I don't want to see us come back down to a discount. First and foremost, that is not okay. I need to see us continue up, complete the market maker model here, since we are inside of a premium, and clearly we're digging deeper and deeper into the premium. But we're having trouble here now, and majority of the time that usually happens on low probability days with no news, and of course, failure to inject volatility. We're gonna watch the S&P chart now. You can see pretty much we're having a retracement for Dow Jones. SPX we're rallying up. NQ we're just inside of the range still. So these already took out London highs, while NQ has still yet to take out the full London highs. Again here, S&P London highs, clear S&P. So that's why this one is weaker, and we're gonna watch, see if this one. Golly, bro, what's my grab? Bro, I'm gonna just ignore it every time it happens. I'm gonna act like it doesn't happen. All right, so it looks like we're switching order flow. We're about to break 3 PD arrays. what it seems like to me. If we do break this one right here, if we close below that one, that's 3 PDA raise broken. Yep. All right, so the 3 PDA raise broken. Order flow has switched. Pretty much, you know, you're flipping the order flow. You're looking for this breakaway gap now to be hit inside of a discount, and yeah, pretty much really it. Bearish prices are coming now, and yeah, I don't think you can really do anything about it now. So yeah, we're disrespecting that. You see, we're strong displacement. I want to see if the other ones are doing that now. Yep, the other ones are doing that. What time period is this? 1020 through 1040 is the silver bullet, high probability silver bullet. Here, what would your silver bullet trade be? There, to me, my silver bullet trade would be right here, cutting some up here at these highs, and then eventually, you know, trying to stop. But nonetheless, yeah, no silver bullet for shorts here, unless this fair value gap up here gets revisited. But I highly doubt that, since we're just back and forth. I'm gonna watch ES now, and of course ES is back and forth too. So we're about to hit this 1 hour order block being threshold. Oh, the proportion block, I mean, and then we're inside of the other order block. I'm gonna make it, no, I'm just leave it. I'm gonna just say it's a breaker. No, I'm not gonna do that. I'm gonna confuse myself. I just wanna make it a different color. I don't like how it's overlapping. Make this bold. So yeah, we're just coming and revisiting this. I don't have any PTA rates except for this inversion for rally up here. As something to watch. With the mean threshold, I would prefer to see that, but I just don't like how we came down so quick. That delivery was strong, in my opinion, to complete this market maker soul model. Fractal took out the lows already. Again, just very strong delivery to me. That, you know, that's kind of why I'm not trading today. It's just very low probability, in my opinion. Your stop loss would have just hit, you know, and you would have been out. And Q again, we're not revisiting this right here. We're not gonna revisit this. In my opinion, these are just breakaway gaps. This could be a measuring gap, in my opinion. Until we reach the low, then that would probably disqualify it as a measuring gap. So yeah. And okay, that's the median range. Let me take this off because I don't see us revisiting that at all. This would be at least a balanced price range, and I would probably want to see that be revisited. Dow, I don't even have anything for Dow Jones, honestly. I'm just watching NQ and ES. So yeah, we're inside of that 1 minute, I mean that 5 minute inversion with the mean threshold on the hourly. I'm gonna watch to see, you know, if we continue higher. If not, we disrespect those PDA rays, and I want to see how we disrespect them. We are bearish now, but I feel like we're just inside of a range back and forth. There's no really indication as to where we want to go as for a trending environment as this institutional order flow entry Joe. If we do drop, that would be an institutional order flow entry Joe. We can dig a little deeper, but not near consequent encroachment. So yeah, I want to see if that happens. This right here is how you become a better trader, by tape reading. I mean, having that screen time, using the PDA arrays, using, you know, everything as your confluence, aligning it all together, using your model, just tape reading, watching order flow. That's how you get to become a better trader. There's no other way. There's no other way for you to become a good ICT trader without you not putting in the work. You have to put in the work. You can't watch a bunch of videos and expect yourself to be a good trader. That's how it doesn't work like that, you know. So here again, we had that what? I'm gonna add the marker here. What's the marker? It's right here. The highlighter. This right here. Boom. Tapped. Then we dropped. The color red. So right there, we tapped up into that. That would be an institutional order flow entry drill. Let me get rid of these right here. I can't really move them. There. I don't have anything else. Alright. I want to see these lows get taken out. Again, it's shorter flincher drill. I did say this was going to be a measuring gap. This would be a breakaway gap. Breakaway gaps get more inside of the range. So inside of this range here from high to low, not this one, but this one, the measuring gap was below the equilibrium, and the breakaway gap was above it. So whenever you're shorting or you're inside of a bearish scenario, Breakout gaps will always usually be above what inside of a premium and usually left unfilled, while measuring gaps will be near equilibrium or inside of a discount. It all depends on how your displacement or your energetic moves are happening. Changing the standard delivery here if we close, but I do want to see how this gets respected. So I'm going to watch this right here, balance price range with the SIBI, and I want to see if we have a change in standard delivery. If not, then a rejection block getting taken out, and then eventually we drop. So again, here just watching, since we're inside of a range, this is probably my hardest part, or my toughest part that I usually deal with is usually just trying to see, if we're inside. I mean, not, what am I saying? Usually my hardest part, my toughest challenge is usually trading inside of a range with PD arrays. Since my model doesn't work really too well with that, my model needs a trend in an environment, not back and forth movement. So that's what I'm trying to build that right now. See if I can, get a little bit better at that. So we might have a change in standard delivery here. I'm going to watch to see if this balance price range or this sell side imbalance becomes inverse. So inverse, want to see this breakaway gap be hit after that. I would have preferred us to take out the lows for sure, but if we're not going to do that, have that change in standard delivery again, that's perfectly fine with me. We're going to build like an injection candle, or injection range, I should say. So yeah, to break out of, and eventually one is going to be respected. So we might have that change in state of delivery. This wouldn't be an institutional order flow entry drone no more. This would be your new range right here from external levels of liquidity, and you would want to use that dealing range there. So that's what we're going to do now. This is going to be our external levels, of course. We're still going to have them on the table, but this would be our new dealing range here. Not that this one. So yeah, I'm gonna watch to see, if we get inside of a premium, do we respect this premium array? If not, then of course what? Watching to see it get disrespected or respected me, and then we drop, and then eventually we get through all this right here. But again, order flow switching. These PD arrays are what gonna become inverse. Gonna be bullish arrays. So to me, that seems like it's gonna be hard for us to even get down below them if we come back down again. Because we're inside of order flow, higher time frame is bearish. I'm bullish too, so it just really seems like it's really of a back and forth range, but a bullish one. I don't think we're going to drop and dig deeper into this imbalance here. I think we already did that during Sunday's opening. We opened up and then we started going higher. Again, here we had a change in state of delivery. We tapped back up into it, created a breakaway gap here. So to me, that very high probability that we're going to continue up. I'm going to watch the other ones, and we're looking at that right now. You can see pretty much ES, big wick down, NQ, big wick down, Dow Jones, again, this one too, having that big displacement though. But again here, this one is just making a bunch of wicks. This one too, a bunch of wicks. So new 15-minute opening candle. We're going to watch to see how this 10:30 through, pretty much 10:45, 15-minute candle right there is reacting. So we're hitting the SIBI now. And to me, we're getting above equilibrium of the dealing range there, and then I want to see if this becomes inverse. I can see this kind of being a breaker here, not too surely. I would prefer it. I would see it more as a mitigation block. Listen to up close candles, but we did sweep, so I'm going to use that. But either way, I think we're going to disrespect it, since we are disrespecting the equilibrium, the premium PD array with the SIBI. So to me, it just seems like we're going to go take out these highs maybe and reach the external level if we want to continue. We came down, now we're going back up. Clear market maker buy model. Buy side to the curve here. This, I don't even know where your original consolidation would be. You can say this is your original consolidation. There's no reaccumulation for longs though, or there's no redistribution for shorts here, and there's no reaccumulation for longs unless we retrace and then start having that move up here. Right here, you can use your standard deviation projections, in my opinion, from this price lag to right there. 2.5, this is where you would usually expect a retracement or a reversal, and then the 4 and 3.5, that's your final terminus, and it lines up perfectly with this buy side liquidity up there. So to me, I feel like we're going to reach it, and we can retrace it here. Honestly, I won't be against that. We're going to take this off, and we're going to use the higher time from dealing range, in my opinion. So we're going to want to check out this right there. Yeah. So yeah, I'm going to take this off right here because we already ran right through it, so I'd rather not see this come back and get revisited. So let's clean my charts up a little bit, have them clean. So yeah, We're revisiting that inversion fair value gap, which is totally normal. I wouldn't want to see this one again. I usually like waiting for the first fair value gap to get this one here, first one to get disrespected, and then eventually I would enter. But nonetheless, in this case, I don't want to enter today, and I don't want to trade today. So tape reading, I think tape reading is probably more beneficial than demo trading in some cases, because you're actually understanding why price is doing what it's doing. Institutional order flow entry draw right there, boom. That'll be a sniper entry if we do start having strong displacement, but if we do not, then we create a mitigation block here, close bearish here, and that would not be, no, that wouldn't be to me institutional order flow entry draw anymore. Since we already hit, I think we already hit, yeah, we already ran, boom, wicked. 12 seconds, 11. But nonetheless, yeah, no, I think tape reading sometimes will be a lot more beneficial than just trying to trade demo, because you're understanding why. You're not like fearful of like, the trade hitting your stop loss, or you're just like gambling, in my opinion, if you don't have a model while demo trading. Even when you're live trading too, you should have a model. You should always have a model. You should always have something that you're like back tested, have a bunch of data collected for. And yeah, so again, back and forth, man. I hate, see, this was a complete reversal here on this one. Again, just not a high probability day. I don't know what I was doing here, tapping that. Again here, retracement or reversal. We got a reversal. I would have liked a retracement and then eventually a rally higher to the final terminus, but we're not going to get that here because today is a low probability day. Again, just back and forth. It's like, this is why I'm not trading, bro. It's just stop loss would have been hit right there. Boom. Like, there's no condition where when there's no news on a Monday, I don't like that, especially if it's FOMC and NFP week. I like to just sit away, sit on my hands. There's no point of trying to take a trade here, especially on the highest probability market, which is the indices, in my opinion. Forex pairs look like garbage right now, and that's all due to seasonality. I didn't mean to, what did I? Okay, yeah, no. What we can see here is 4 close candles, close below that. To me, change in the state of delivery here from that 1 hour SIBI. I would probably have to target some sell side liquidity. These lows down here, relative equal lows. If not, this buy side imbalance as a target too. I wouldn't be against that, since it's kind of aligning as a balanced price range here. Right there, like that. I wouldn't be against that at all. So if we do have a market structure shift too, that was gonna like, all right, we're gonna probably push down lower, but I would prefer it all in the 5 minute there with that. So yeah, these are relative equal lows. This could be your target if we do start to drop and form a market maker sell model. This could be your original consolidation right here, all this right here, this right here. What could your reaccumulation? I know this would be your smart money reversal here after we take out these highs. For me, my reaccumulation for longs, probably right here. Probably right here in this range. And then we rally back up. Now I'm going to want to see a redistribution lower. Like, just one redistribution. We don't even need two, in my opinion. So sometimes you'll have 2 reaccumulations, like right here and right here, and then you just have like 1 redistribution lower if you have a high injection of volatility, which is news. And if not, then you'll have 2 on a regular day, probably like today. If not, then you won't even have anything. You'll just be back and forth like NQ, bunch of wicks doing the damage. So again, I would have wanted the standard deviation area projection to get respected, but again, we did reverse, we didn't retrace. So I'm a little mad about that. Again, we have a SIBI here, watching to see. This was an institutional order flow entry drill. This was sniper entry. Where would you target these lows right here that are all building up? But again, I wouldn't trade this condition, even if you try to pay me. So nonetheless, yeah, discount right now, premium. We are just still inside of this range, and I would want to see sell side liquidity externally on the 1 minute get hit right here. SIBI on, I mean not SIBI, SPX correlation here. We're just dropping. This one, I want to see if we can get below this near close we already created for all of them. This one right here. For sure. Yeah, I want to see if we close below this too. Not against that, but I think we already did. So what's the open of this? 23.9. What is the close? 23.8. So yeah, we did close it below it already. We can see mean threshold being hit with the little inversion fair value gap, reclaimed fair value gap, whatever you want to call it. So yeah, I want to see those lows get taken out. If not, consequent crush when this wick be hit, we rally up. I can see that happening. That's, you know, it happened over here, but and then if not, rejection block takes it out, rally up. Disrespect this mean threshold and the inversion for value gap. We form a change in the state of delivery for these two down close candles. We disrespect this SIBI, and then this one, and we continue back up, and we have that same play right here happen again. So I won't be against it either. I can see, you know, a bunch of scenarios happening, and that's not good. Whenever you see a bunch of scenarios, both sides of the range being traded, that is not good. You want to get out of that, or you can trade it if you're, you know, an intraday scalper and you favor that type of price action. I'm not against that. That's all you. For me, I prefer clear bias and direction. And for these days, I just prefer to take read. I feel like these days they help you a lot more understanding the concepts, especially on days where you know you're not supposed to be trading and just want to step away. So yeah, that's really it. Again, boom, we're getting that happen like I just stated. No more institutional order flow, Joe. This would be my standard deviation projection area right here. Not that one. This one right here. So around this level, I want to see these highs get taken out. And then probably seeing if we get a retracement or reversal back inside of this balanced price range here. I want to see this get ran through, like completely with speed. Right there, we get here, sweep. All right, hold on, we're gonna come back down. If we close above here, then of course I see that probably these two down close candles here, mean threshold of the range, mean hit again, because that would be our New Dylan range right here from this low to this high, or you can use this high to this low. And we can see we hit a premium, hit that balanced price range. We're like, all right, hold on, we don't want to go up there yet. With speed, you know, we don't want to go up there with speed on a day like today, which is normal. I'm just watching to see that. Clear. I would want to see this become inverse, but I would prefer this one to be inverse to make me even more high probability that we're going to reach that buy side. So I'm just waiting for that. What is it get inverse? Let's look at SPX. We're back and forth. Breaker block forming currently. If we do close above for this one right here, clear breaker block. I feel like SPX is a lot more favorable to trade right now. But NQ is like one of them where I'm just like so used to watching. I feel like I have more screen time on NQ than in SPX currently for this year. Not previously. Previously, I would be watching a lot more SPX. Because NQ would be a lot more volatile, and I'd be a lot more scared because I wasn't fully experienced, and I just didn't know how to trade. I feel like this year has been a very good year. We started off this year really good. Market structure shift. We left a fair value gap. This would be a clear, you know, 22 model, but we never swept liquidity, so I don't know. It wouldn't be a 22 model. It would have the other criteria though that you look for in a 22 model. Nothing else though. We didn't sweep the liquidity. Intermediate high got broken. Market structure shift there. So yeah. Again, I want to see us get above that balanced price range. Reach this level at least. Take out the liquidity, and then retrace. If not, fully reverse, come back down again. I wouldn't be against that. We'll see how the other ones are doing. You see GU clear market maker buy model, market maker sell model. But again, you don't want to be trading this because dollar higher time frame we're bullish. Higher time frame we're what? We're bullish. Daily time frame we're bullish. You know, you can trade it intraday, but today on a day like today, you don't want to do that. You don't want to force your hand. You can get hurt. It's not worth it. Like this, right? You would have got hurt multiple times. Just stopped, break even, or you hit one take profit and then you're out. You know. It's not worth it, man. Or you miss the trade and you enter late and then you get stopped out. You know, it's not worth it. Just wait. Wait for something good, you know. There's no point in trying to force your hand. So we didn't get it above the breaker here. But we are inside of this right here for ES. We did close above it already. Busy. Institutional order flow entry draw right here. If we don't, continue lower. This one didn't have it. You see that? So that would tell you a story. So when it gets bullishness, and once it get bullish. This one, ideal, not ideal. Again, this one never closed above that balanced price range, or that bearish balanced price range. This one did. It closed above the second inversion fair value gap. Swap liquidity. No more institutional order flow entry drum. No more sniper entry. We got another one here now. Perfect. Look at that. 0.25 got hit perfectly. Watching this one though, I want to see this one have that strong displacement. Close above here. Or I mean this candle right here, this new one we're forming. Make it a bearish, bullish order block, tap back, and rally. That's all I'm really watching. Again, disrespected. All these PD arrays, disrespected. The standard deviation didn't even get reached this time. It's crazy. We'll leave that one on though. This one, we'll take it off. Order block hit, or order block hit with the first fair value gap. Nice. Very good. I want to see this rally now. Make this an order block. Don't tell me we're not gonna do that. Please, come on. No, we made this inverse. That's kind of why we're not going up there. I would have preferred though, you know, we did, but if we don't, then yeah, I can see us. It's, you know, understanding why. I would have liked this to become an implied fair value gap with the wicks, but I don't think we're gonna get that. It might not happen, honestly. The implied fair value gap won't be against that, honestly. I like using those. I don't use them too often though, but I try to. I think those are probably one of the most underrated fair value gaps that ICT stated. Well, a lot of people don't recognize them, don't use them, so I'm gonna keep them to myself, you know, honestly. If y'all don't like using them, I'll use them. Doesn't matter to me, you know, what type of fair value gap. Especially like on these markets here, like CAD JPY, when a bunch of wicks, you know, like this right here. I was doing my tape reading analysis. 80 JPY, what is 80 JPY? I don't think we never met the standard deviation projection. Crazy, man, crazy on these markets. I don't trade them, man. I don't trade those. They're not good markets for me. Plus, I'm not a JPY trader. I'll probably just water review this stream and see where I can improve upon when tape reading. That's really why I'm streaming. I'm not even streaming just to stream for viewers. I'm streaming just to water review this. There's no other way for me to not stream and VOD review it. Unless it's on Twitch. I don't feel like going on Twitch. I'd rather have just the YouTube here. Might as well. It's easier. I'm getting what I wanted from before. I'm gonna want to see this candle here. Get close above. Reaching my standard deviation projection area. Come on, you gotta at least close above, bro. I hate how this price action is today. I don't hate it, but I just don't like it. It's not favorable for me. I'm just sitting on my hands and just tape reading. I've been doing a lot behind the scenes when it comes to trading my model. Monk mode. Again, we're revisiting that. I would have preferred, again, this right here to get closed above and considered as an order block. We didn't get that. Here, 15-minute time frame. South side or buy side, most likely reaching south side, if not ranging. Wall Street Journal breaking news: U.S. failed to stop a deadly attack on a military outpost in Jordan when air defenses confused an enemy drone with a U.S. drone, U officials said. Breaking news. That was breaking news right now from the Wall Street Journal. Just posted. Forming a Sibi here. Not respecting. We are kind of respecting, but not really though. I feel like we're making accumulation zone right now. We're gonna have manipulation very soon. I feel like it's gonna be to the upside. We're gonna have a manipulation lower, upside down. What do I got? I forgot what I gotta do today. I forgot to mark it out. Gonna do that later. Right now, we'll look at the euro. Euro's dropping. Re-reached my target on sell side. Again, I was thinking about posting a charting video. I recorded it, but then I was like, man, do I really want to post it? But I told myself. I had this all marked out yesterday. Yesterday, this one too. I meant sell side. Side of this right here. This right here. Daily there. I would have liked the market maker buy model to form. We are getting that now, so right here, boom, boom, market maker buy model here forming clear as day. This, ladies and gentlemen, is where you enter. You enter at the mean threshold. Again, I'm not gonna take this, bro. I gotta sit on my hands, even though this one looks a lot favorable to me. I won't even lie to you guys. I'm just gonna sit on my hands. I'm not gonna do anything. I would have loved it. I won't even lie. Enter right there. Stop below the lows, cause this is 1 PD array. This holds 2 rejection blocks, 3 PD arrays. Where would I target? Probably equilibrium first and foremost of the range. So an area in equilibrium. If not, use standard deviation projections here. Target the 2.5 to the 2. You're right here. Maybe 1 to 5.8. If not, then a 2.5, and it aligns perfectly with what's right here in the middle, a order block, a bearish one. So again, I wouldn't take this though, again, because I'm tapering, and even though it looks really favorable on a day like today, I still probably wouldn't want to take it. So nonetheless, yeah, good market experience here. Just looking at it, building my intuition. I'm gonna leave the standard deviation projections. See if we do get there up there. Yeah. So, inversed, formed, dropping, breaker never formed. So, order block they were respected. I think it was on 1 hour order block or 15-minute. Yeah, it's 15-minute. I think 15-minute. Yep, changing the steady delivery looks like it's gonna happen in 8 minutes, from what I'm seeing, and it probably will be a breaker. But for right here, you know, these 4 plus candles changing to the delivery, and then a breaker form. Probably with a market structure shift, and then probably take out these lows. I want to see actually if we do displace a lot lower though. I feel like we won't. I feel like we won't move too much. This one never got up there, so here we have a breakaway gap too. Can't even really see it. What's going on? Wow, I can't, bro. My mouse. I need to go back to aim labs or something. Can't even hit my own targets on trading view. All right. Inversion fair value gap. We got a little sloppy getting down there, honestly, but nonetheless, another fair value gap there. You can see this being hit. I was seeing accumulation here. I won't lie to you guys. I was seeing AMD right here, pretty much. Right here. Not really enough though, in my opinion. Back and forth movement. I would have wanted more back and forth movement for the accumulation zone. I think this would be a nice one, but it's too big in my opinion. I feel like it's too many pips. So, yeah. Watching to see if we hold the SIBI and this inversion for like right now, and aim for all that sell side liquidity resting down there. Again, just not trading, bro. I'm so glad it didn't. I'm not even glad. I just know what high probability days look like and when they form. It's simple. I don't know why I don't know why I'm glad. Why are you even glad, man? Roxy, why are you even glad, bro? You know when not to trade and when to trade. You have enough data. You have enough screen time. Just build up that experience. That's really it. It's building up that experience, honestly. There's not a point in my life where no, yeah. But the Discord is dry. I won't even lie. My Discord has probably died. It's because I don't post as much anymore, and I'm not posting on both of the channels, the SMT channel and then my SMT Roxy channel. Main reason why, again, monk mode. I did say I was gonna post a lot more, but just as of recently, I just told myself, like, don't post anything, bro. Like, get funded, get payouts, and then eventually come and, talk about trading. You gotta have credentials. I've always said this. You gotta have credentials no matter what. And I'm not even if I do pass one funded account, that doesn't, to me, seem reasonable to go and start, saying you're a funded trader. If you just pass one funded account, you haven't had profitability consistently for 6 months. To me, you're still not a trader. You're not a consistently profitable trader. Even if you pass one funded account for 1 month or 2 months or 3 months, you need 6 months, half a year, seeing where you at. All the seasonality play out. All your P&L throughout the whole year. You need to watch that out. And that's kind of why I'm debating whether if I should come and after of course get funded, make videos, talk about but I don't want to be like that, bro. My objective was never to be like that. I was always wanting to be an entertainer, not a guru. So I might not even go to that direction, like teaching people how to use the concepts. I might just make entertainment videos again, like challenge videos. Probably after I get funded though, because I've always had you got to get funded and be a trader no matter what, and have payouts, be a consistent profitable trader. So that's my main objective. Then after that, I'll see where the content wants to go. I want to see go back to making educational type videos or just entertainment, because I don't see a lot of entertainment videos on trading, because trading is a serious thing. But nonetheless, it's not like where I'm putting the viewer in danger or anything, but just like me trying to make an entertaining, challenging video, I'm saying don't try this at home type stuff, because it involves real risk. But nonetheless, yeah, no, that's pretty much what I was thinking of planning on doing. But probably coming back and like showing you guys my model and my scaling plan, because I already have that. I already have my model and how I approach funded, recorded, but I don't plan on posting it until of course we have it completed, which is passing a funded account. It's pointless having that video and posting it if you're not even funded. So yeah, that's pretty much really it. Probably until I get to like step 4 on my scaling plan, then I'll be debating on whether or not to post it. I'm like, maybe I should post it, and I should have like a little update video after, whenever you finish the scaling part, and like show them how we did it, and like have the experience and example there present, instead of just posting the video. It's pointless if you're not doing it correctly and you're not doing it and showing them how you did it. So yeah. And then we're just rallying here now. I like that. Breaker here for me, honestly. I feel like we're gonna have strong displacement. I know you can see that here, clear as day. Hopefully I spotted that out. And standard deviation areas project all the way up here. Again, reasonable for me. Reasonable, but it's all high resistance. Kind of low. Kind of low resistance, but I would count these areas here as high resistance, because we sweep them, come back down. We never come back, sweep this, come back down, sweep this, come back up. You know, it's high resistance to me. I don't plan on getting up there pretty quick. We didn't even close above here either, so. Where we at? Back into the inversion for like, damn, this is like reclaimed. Better be 3 times. Back and forth, back and forth. But yeah, nonetheless, I do plan on passing these fundeds, man. Pretty quickly too with my trading model. Just, in my opinion, I plan on, I can't say it, guys. I can't even say it, honestly. I don't even want to open my mouth. Just know, behind the scenes, a lot of work is been happening for me, and just me putting in the work. I'm updating my notes too right now for what I was just talking about, the scaling plan. That's kind of why I was talking about it. So I'll just update it right now. I had it on my Google Docs, but then I put it on my iPhone notes. Because I already got my trading plan on both too. And I just prefer Apple Notes, I won't even lie, currently. We're just updating it right now. So we got the scaling plan with the how we approach fundeds together. So monk mode, bro, I think monk mode changes a lot for everybody if you approach it correctly, if you use it correctly too. I started my first monk mode last month, or last year, I mean, during November, and I lasted around like 36 days. And let me tell you, bro, those 36 days I learned so much and I developed so much. I would recommend everybody, even if you're a trader, even if I don't even know what you are, bro, but whatever you are, bro, like if you're an entrepreneur, if you're someone, not even that, bro, if you're like someone that just wants to be great, try monk mode. Do it. Why not? See the benefits. Just try and monk mode out, bro. There's nothing wrong with monk mode. Trying it out. For me, I developed a lot. Hold on, we're going to take out this liquidity here. But what I think I just developed a lot more, especially my reading. When I view my monk mode from September, October, and November. Not even monk mode. I didn't even start monk mode until like late October, early November. But before that, like during September and October, I was trading OTE model, and then I was trading OTE model. I wasn't charting correctly. I wasn't meditating, so I wasn't able to identify a lot of the problems in my life when it came to trading and just like my life in general. And then whenever I started monk mode, I started meditating. Started journaling a lot more, not even like journaling my trades, but just journaling my day and having like journal prompts of certain things. And then what else? Oh yeah, and then meditating. I was reviewing a lot more, and I was studying a lot more too. And then reading. Okay, I was reading decently back then in my first monk mode, but I wasn't taking notes properly. I wasn't taking notes while reading the book, and I feel like that affects you a lot more as opposed to like finishing the book and then taking notes. I think you don't remember. Of course, I was highlighting passages, certain parts of the passage that I really resonated with, and then take out sell side here. I want to see if we dig deeper now. That's what I'm watching. I'm gonna take off the stealing range. I want to see if we purge this and we'll come back up, or if we have strong displacement and we create a fair value gap inside of that, near that low right here, and then continue lower. So I'm gonna be watching to see that, guys. 2 scenarios can happen. I would prefer the first one, where we just purge it and rally back up. But if we do have strong displacement, create a fair value gap near this low, then yeah, I can see us continuing lower, probably to another area of liquidity. I don't know if these lows will be prominent. We already met that, so probably like a dealing range, probably from this side to this low. So we already are inside of a premium, so I'm gonna see if we continue lower. Honestly, I can see this being your manipulation right here from all this accumulation, but it would be hard because this is a kind of a big accumulation. So just wait. This could be a market maker buy model in the making right now. We take all these highs up here, but yeah, nonetheless, reading. I wasn't taking notes while reading. I was taking notes, archiving the book after I was done reading. But again, you don't remember much from like each chapter if you don't take notes while reading. That's what I do now in 2024. I did a lot of research about how to read properly, because back then in the school system, they'll teach you a little bit differently. They wouldn't teach you to take notes while reading. For me, you just read the book and then you just try to remember what happened, and then you take the quiz and that's it. But when it comes to nonfiction and reading about nonfiction books like that, of course, like self-improvement and trading psychology and all these other books, it comes down to like remembering most of the important stuff, and having a summary too, and all this other stuff. So it's very important. But yeah, nonetheless, reading has helped me a lot recently with developing my reading skills, and of course like reading scripture, and doing all these other things. It's very important. It's getting me closer to becoming a better entrepreneur, in my opinion. Even if it's not reflecting in my trading, even if it's not reflecting on, in like the first, 3 weeks, it doesn't really matter to me. I know if I continue doing this, it will compound. Same with trading. If you follow your model, you don't see too many trades form, or if like you're on a 5K account, you're barely making any P&L, risking 1% on your model, eventually it's going to compound. If you pass that 5K, you're profitable. You go and get a refund for your payout. You don't risk too much. You get a 1% payout or 2%, depending on how much you're aiming for. And then eventually you buy another funded account. You continue to do that. You continue to scale. After you reach like a certain point, to me, after you reach like 100K account, you don't need to risk more than 0.5 to hit a 1-to-1 and then buy another funded account. I think that's really, really reasonable. After you reach like 200K, you don't need to risk more than 0.25 to buy another 200K account. It's crazy, I know, but you don't need to risk that much whenever you're funded. There's no need for that. I don't plan on doing that. I plan on risking like 0.25 whenever I get a 200K account, or if like the accounts are below, a 200K account, I'm going to risk 0.5. If it's below, a 50K account, I'm going to risk, 0.5 or 1%. Depends on how big the account is. So it all depends on the size, but nonetheless, you do want to have good risk management, and you want to have a game plan, how you approach these funded accounts. You don't want to, be entering blindly like I was. I entered blindly. I was trying to pass this account. I didn't have an approach. I didn't have a model. I didn't know how to trade correctly. I didn't have enough screen time, and I was using everything and I was trading everything and I didn't know how to trade. And that's one of the worst ways. And that's why a lot of prop firms take a lot of people's money, because a lot of people don't know what they're doing. And it's perfectly fine if you just learn from your mistakes, but don't judge yourself for your mistakes. So learn from them, reevaluate them, have a filtering process of understanding what works and what doesn't, and just learn and reevaluate, revise and review, and constantly seek improvement in your trading. And that's what I've been doing recently, honestly. Enough of the rambling though, but again, we did close below here. This one we did close. Wicks. Gonna watch ES. I'm still watching Q, but I would prefer to watch ES here. Nonetheless, since we did close below that 15-minute change in state of delivery here, and I would say this would be a breaker. Nonetheless, it would be. So yeah, nothing but chop there. You see that? I'd prefer to watch in Q though. So yeah, but yeah, no, that's really it. The rambling. Just talking about what I'm doing, why I'm doing it. I guess you could have used this as your standard deviation projection. This right here. 3.5. We hit 3.5. Yeah, we did. We reversed. I need to open chat. I forgot. Like the splits I'm watching. Forex Factory. I want to open my chat real quick. That's the playlist I'm currently on for my research. I think that's the last playlist I'm gonna watch for trading. It's a bunch of traders. I'm watching them. I'm like already done with the model, or the playlist. Hello, how's it going? The funded found 3 entries today, but held myself back as of FOMC week. Sadly, they all hit TP by checking chat. Hello, it's been a while. It's all about using retail logic to anticipate where sell stops and buy stops are at. That is true. Yeah, I wasn't reading chat, man. What am I doing? But yeah, nonetheless, today hasn't been a high probability day, honestly. I was looking at all of this right here. I've seen plenty of trades, nonetheless. But again, just today as a tape reading day for me. I already stated this multiple times. But nonetheless, yeah, there were multiple trades. But once you get in, I feel like you're hitting your take profit, or you're getting stopped out like near break even or a little bit above your break even point if you trail your stop. Yeah, today's just a back and forth range. I would have wanted AMD to form here on a day like today, but I don't think we're gonna get it. We did sweep the lows. We didn't get any displacement lower from the lows to form a fairly gap to continue lower. So to me, that seems like it's a purge on liquidity. I would use this right here. See if we want to retrace back up to there. I feel like we're forming a mitigation block here. If we do go and close above these two down close candles. Waiting for a short entry. You better trade? I wouldn't trade this, but I mean, if you want to take this, you can. I would have probably took a short here, honestly. Institutional order for entry draw. We didn't even go near that consequent encroachment of that SIBI, and we had a inversion there. Reclaimed the inverse, tap back into it, and then we started dropping. But even nonetheless, we took out sell side, so I wouldn't even want to take a short in the first place because of that. I would prefer to see a market make a buy model form here, but the sell side to the curve looks very sloppy, so it looks like all high resistance to me. We took out this high, went up. Took out this high right here, went down. This would be a 22 model if we swept liquidity. I was talking about that earlier. Intermediate high broken, fairly got formed. Retracement, no retracement. I mean, then we rather higher breakaway gap there. This would be the 22 model too. So inverse. Do you only trade afternoon session? I don't even trade. I do trade afternoon, but I don't only trade afternoon session. I'm watching the economic calendar. Today is not even a high probability trading day, so I won't trade that. Tomorrow I'm going to be watching that. But today, on a tape reading day like Monday, I usually live stream it. But on the other days, I usually like trading by myself. So it all depends, on the economic calendar. If I want to trade a PM session or AM session, see what's more favorable. Like Wednesday, I probably will trade PM session. Tuesday, I'll probably see if I can trade AM session. So yeah. That's pretty much really it. It's all viewing the economic calendar, viewing my model, see if it presents itself. If not, then just stepping away. Because when the model presents itself, I risk a good amount, and it's A+, and usually I win or I hit break even. I'm totally fine with both of those. But yeah, on a day like today, I wouldn't want to trade. I'd rather prefer to tape read, or just tape read. I wouldn't even want to demo trade today. Because sometimes when you demo trade, you're not fully learning how to use the concepts, or you're not seeing them from a perspective where you're analyzing the market. You're trading it. You're not analyzing. You're not being analytical. You're being a trader. If you enter a short here, you're only viewing shorts. You only want to see the market. You're only one-sided. You only want to see the market move down. You're not viewing it from a neutral perspective. Basically, that's kind of why I like tape reading on a day like today, because you're having a neutral perspective. And you're viewing both sides of the market. You can see, I can see us going up here. I can see us making this inverse, continuing up, having a standard deviation lag from this lag right here, reaching the 2.5, closing above here, this order block, and then making it a breaker, and then a breaker, and then eventually rallying higher. Taking out all this buy side, I can see that happen. I can have a neutral perspective when I'm tape reading. If I was demo trading though, or even live trading, you get one-sided. You only want to see the market do this, and you don't want to see it do that. So that's kind of why I like tape reading on a day like today. Or I just like tape reading in general when I'm not trading or when my model isn't presented. It helps me understand what I'm looking at and why I'm looking at it from a good perspective. And you're just, how should I put it? You're just I see a SIBI there, so we're tapping into that first for the gap. This one, it got inverse, but I'm totally fine with that being inverse. I would want to see this one inverse if you want to continue up. So yeah, this standard deviation lag. This is what a mitigation block. You can use mitigation blocks with standard deviations for retracement lags. These are retracement lags. There's the manipulation lag, and then there's the breaker lag. There's multiple ways to use standard deviations. And again, I got to make a commonplace book. I need to rough draft it for all these things, for all these concepts, reviewing them, not even, having a table of contents. First thing I'm gonna do though for my commonplace book is going to be a liquidity points, or no time. It's gonna be time, and then eventually liquidity. If you don't know what a commonplace book is, I'm gonna search it up for y'all right now. Commonplace book is pretty much a collection of much sayings. Pretty much, it's like a journal, but it's more of a recorded events and ideas. A commonplace book, on the other hand, is a repertoire of thoughts and ideas to collect from your own sources of future user and reflect upon. So it's basically a journal. It's basically gonna be my journal of all the notes that I've taken and like sorting them all together into like a certain table of contents of pretty much, the concepts. So like table of contents, one could be liquidity or time, and then two could be fair value gaps or redelivery into an inefficiency, certain things like that, fair value gaps, or each PD array. It's for me only. I don't plan on posting that or making that public or selling a book or anything. That's pretty dumb. ICT already got that, and I feel like this one's more personal, so it's pointless doing that. It's for me only. And then eventually having a commonplace book for my books too, for like philosophy, for the stoicism, for like trading, for psychology basically, or it can be entrepreneurship. It could be funneling, sales, the art of closing a sale, stuff like I got, or .com secrets, the funnels, so using like things like that for a commonplace book, having all that information stored in a certain area where you can reflect upon it. And because my notes right now on my Notion are very cramped. I have like the 23 mentorship all cramped. The 23 mentorship talks about plenty of things: silver bullet, new week opening gap, new day opening gap. It's all like in different sections, and I don't like having it like that. It's all disorganized. I'd rather have it organized, and then whenever I'm reviewing, I review the most important parts or certain key areas where I want to review, and I know where they're at. That's why I want to make a commonplace book, a digital one for a rough draft, and then eventually having it physically in case I go anywhere and I want to review it without my phone, having service or something. And just like, or just not even using my phone, just being out there somewhere and just like reviewing the commonplace book. For trading, it could be just anything in general, honestly. So yeah, we're still yet to make this inversed. I want to see that become inversed. Bro, sorry about that, bro. I keep rambling. I'm not even gonna lie. There was this one book that said a lot of people don't need a doctor, but they need an audience, and that's me right now. I think that was from Dale Carnegie's book, How to Win and Influence Friends. So yeah, I still remember that. It's a good quote, honestly. A lot of people don't need a doctor. They want an audience. They want to talk about all their, what's going on in life, their issues, all that, what they plan on doing, their ideas. Was just joking, bro? Nah, you weren't joking. I know you took a short right here. Took a short as soon as we tap back into this. I told you. On a day like today, I wouldn't want to trade. I wouldn't even take a short. Again, we swept liquidity. We didn't have strong displacement lower. If we did, then I'll be like, all right, hold on. I'll probably take a short. But even then, we came into a premium, came back down, discount. If we came into a premium, we tapped up into it, you would want to see strong displacement below this low, first and foremost. But again, here, I think we're just both sided of the range. Euro market maker buy model, GU market maker buy model, standard deviation projection is likely to be hit sooner or later, in my opinion. For GU, it's gonna get there very, very slow though. That's kind of why I don't want to trade slow movement, slow day in general. We're still yet to make this inverse. I want to see this inverse breaker form. All right, we push up. I think we're gonna rally, take out buy side. If not, use the standard deviation projection area, and we're gonna reach that and probably reverse. One of the two scenarios. I would have liked both of them to happen though. But on a day like today, you can't expect anything, honestly. Can't even expect us to go higher and close above that inverse. For right now, just look at the delivery. Is this favorable delivery? Do you actually want to trade this delivery here? A lot of people, I don't know, man. Everybody wants to trade every day. I rather not trade every day. I learned, not trading every day is better. You learn it the hard way, blowing funded accounts, blowing your capital, learning from your mistakes. If you don't ever learn from your mistakes and reevaluate what you're doing and just be consciously aware of what you're doing, then you're never going to progress, in my opinion. Of course, don't judge yourself. I think that's very important. Don't judge yourself for your mistakes. Just learn from them, all right? So that is very important, in my opinion. If you don't judge yourself, you don't badmouth yourself, I think that affects your trading a lot, because I used to do it when I was first starting. And let me tell you, it didn't work out. It didn't work too well. doing that. So I recommend nobody to do that. Don't judge yourself when you're reviewing your mistakes. Just learn from them, reevaluate. That's what I did with my streams. I was reevaluating my streams during when Christmas break for me. So like the 25th through like January 1st, I was reviewing all that. So we got a breakaway gap forming, strong displacement up to the upside. I want to see now right here. This right would be my standard deviation lag, 2.5. I want to see us reach that. And then reverse, it aligns perfectly with over here, this buy side up here. So yeah, I would like to see that be it. So all that right there, just rallying up now. If we don't get that, then of course, just taking out this high, that'll be perfectly fine with me. Hey, if you took a short right now, bro, you would have been out. I'm not even gonna lie. If your stop was above this high, you were using that as liquidity, bro, for a breaker block. But yeah, no, just reading the tape, reading the environment of the market, seeing how it's forming. This builds your screen time, this builds your experience, this builds you as a trader, honestly. See if you're disciplined. I want to see if we get institutional order flow entry drill, tap back into this and rally up. Or I feel like this would be a measuring gap, honestly. I feel like if we got, yeah, we're already above breakaway gaps. This would be a breakaway gap. This would be a measuring gap if we do tap back into it. So again, just using dealing ranges. I guess we tap back slowly. We tap back barely. So that would be institutional order flow entry drill. Boom, boom. This would be a breakaway gap. This would be a measuring gap. Very simple, very sweet, very ideal. It's very ideal. Why? Because it's deep into a discount. You don't want to see measuring gaps be tapped back into if you're not above equilibrium. So that is pretty much why. How to use that. If you don't know what that is, measuring gap, for a common gap, or a what else? What is there? There's just regular gap, measuring gap, breakaway gap. If you don't know how to use that, go to 23 mentorship ICT. He talks about it plenty of times, of how to use it, how to view it, how to understand them. So yeah. So if we come back down to the breaker block, I won't be against that. Using the new dealing range here, this would be like equilibrium. I wouldn't be against that either. But I would prefer us to stay inside of this overlapping range right here with the PD arrays. So I'm gonna take that off. Let's measure this right here. So this right here, respected. I don't want to see us dig any further, or I mean we can wick out of here, but I wouldn't want to see us close like near below this area right here, this quadrant where the breaker and the BISI overlap. I don't want to see that. I'll mark this. I usually mark that out though like this whenever, because this is unfilled. Now this area is unfilled. So I would want to see us continue up now to the upside. That's all I'm watching. I want to see what mitigation block here form. Institutional sponsorship is being respected. We'll continue up. Bro, these concepts work. These concepts work if you just put in the work. That's all it is, bro. The concepts work. You have to tape read like I'm doing right now. You can't trade. You shouldn't trade on a day like today. And you should just relax, tape read, build your understanding of what and why the market is doing what it's doing. And it's that simple. Then you become a better trader. Then you'll learn, okay, why didn't this right here? You ask questions, why didn't it close above here yet? Well, we got 25 seconds left. We have a fair value gap. We revisited twice. We took out, these buy stops up here and up here. We are revisiting a balanced price range. So, that's answering why we didn't close above here. So you want to ask yourself questions. You want to ask and look to the little bit of the left side of the chart so you can predict the right side. That's all it is. But nonetheless, I still see us reaching up here. Why? Because using the standard deviation projection areas, it seems like a reasonable area. We swept liquidity, formed a breaker, we have a BISI, a market maker buy model. Sell side to the curve doesn't look really, really beautiful in my opinion. So if we don't get up there, that would be my reasoning why, because of all this right here. I feel like this is all balanced in my opinion. This right here is the most balanced. So it would be hard. But I think once we get above this high and this low, then I think we're going to be good. But until then, it's going to be hard delivery. So we close above here, we continue higher, then I'll be like, all right, hold on, we'll get there with speed. Maybe not. Maybe we'll get there very slowly and climb our way up. So hopefully you didn't take a short. I'm still wondering, you know, if he did take a short. Is there any other questions? How long have I been streaming for? I gotta see. What, an hour and 25? I don't know when I'll end the stream. It'll probably be random. I won't lie. So I'm just like so intrigued as to what the market is doing. I want to continue tape reading. So probably until like it dies down and we start chopping back and forth again. Then I'll probably just leave. Probably like this price action. I'm like, all right, I'm out. But right now, price action to me is still volatile. Not as much as I would like. Again, we're not getting what I wanted, so that just goes to show, you know, don't trade it. Where's this low at? Oh, it's right there. Retapping into the inverse. Again, I wouldn't have wanted us to come back into this overlapping array. You can wick into it, but I don't want to see a close. So if we get a close, to me, I'm just not even looking for a long bias anymore. I see a market maker, so I'm auto forming here. So yeah, no, we probably won't get that. Probably come back to the breakaway gap. Dylan range here, you know. It's a very low probability day again. It's not favorable at all. Not good at all, man. Not good at all, guys. Probably VOD review this later. Look at this price action. Y'all want to be trading this? Y'all want to be trading this price action? This one, I would have wanted GU to continue up. This right here, continue up. But if I don't get that, that's perfectly fine with me. I don't want to see this retrace. Yeah, we're retracing now. It doesn't look too favorable. It's like a 0.5 level right there. I don't want to see that be hit. A breaker here for him. I would want to see that respected, honestly. Swap liquidity. But we didn't have strong displacement with it, so it probably won't get respected in my opinion. Whenever breakers form and you're having a market maker buy model, you want to see them leave a breakaway gap and continue higher. Especially if you're inside of like a deep discount like this, you would want to see it continue higher. At least reach up into a equilibrium of the range or premium, and then start having that retracement back, or use the standard deviation areas to retrace. If you don't get that, then of course, you know, you you're gonna be a little bit skeptical. You should be a little bit skeptical, I should say, and you should be watching the market, seeing if you need to try your stop to break even. So we're inside of a SIBI, and we're hitting it right now. We're hitting the breaker block, and we're using it as an inverse. So that's pretty much really it. I'm about to go use the restroom. I'll BRB. But what I want to see here now is probably this get respected, we drop, and then probably reach for these lows down here, and then these. If not, make this inverse, continue back up. That's pretty much it. Alright, so we're getting what I wanted for the inverse part. Oh, we got what? We got an inverse pretty much. So we're continuing back up. If you can see both sides of the range being traded, don't trade. That's all I say. That's all I see is both sides. And that's something ICT talked about, was if you see both sides of the market being able to be traded too, don't trade, bro. Just step away. And that's why, like a day like today, I told myself, you know, as soon as I woke up, I looked at the charts. I was like, hell no, I'm not trading this. I was like, bro, this is sloppy. And Forex has just been super sloppy. And I was like, man, if the indices are sloppy, I'm not trading. And I saw that. The indices were sloppy. I was like, all right, yeah. There's no point in trading today, breed. Because I would have wanted it today to be a good day, you know, to trade. Since we have NFP. Mondays, are usually high probability, but we have FOMC mixed in with NFP, so that makes Monday not a high probability in my opinion. It makes the week even harder to trade in my opinion. I feel like we're gonna have like that midweek rally or something, or consolidation Thursday reversal or something like that in that weekly profile. It's usually hard to anticipate the weekly profile, but I'm still gonna be watching it and seeing how we form that weekly candle. Nonetheless, that's pretty much really it. It's pretty hard, honestly, I won't even lie, trading weeks like this, especially the first week of the month or of a new month, is pretty much when NFP comes out, and that's usually the hardest part for me. CPI, I usually have a good time. What else? FOMC, if it's like on like by itself, I usually have a good time, but during NFP is usually the one I usually have trouble with. And that's what I know my weakness. NFP, just stepping away or just tape reading, not doing anything, sitting on my hands. Preserving capital is important, so that's what I'm trying to do. I'm not trying to blow these challenge accounts anymore, and I'm not trying to take anything that doesn't follow my model. I'd rather just tape read on the 1 minute and build my understanding of order flow. So yeah, inverse here, order block forming here. Time to enter long, bro. I hope you're joking, honestly. Shine Shaji, how you saying him? I don't know how to say it, man. I want to look at your profile pic. What is your profile pic? Is that you? Is that you as a profile pic? Time to enter long. Enter long, bro. I'm not gonna hold you back. I'm not a financial advisor, and I'm not telling you to enter long or take shorts. I'm not telling you to enter at all. I've advised multiple times. I'm not trading. I wouldn't trade. So you do you. This is not financial speculation. This is not financial advice. This is strictly for entertainment purposes only. Do as you please. So yeah. Hi, bro. Hi. Breaker was, I would say, respected at a certain degree. Mean threshold hit, rallied perfectly. But you gotta anticipate that before it even happens. Before it's about to hit, boom, you hit and you rally. That's okay, bro. I'm just sharing from my analysis. Okay, yeah, no, hold on, yeah, okay. I think that's a good thing, sharing your analysis. If you want to enter long, you enter long. If you enter short, you enter short. I am not advising you. I'm just trying to say, not an advisor. I'm not trying to tell you to, how to trade your capital or anything like that or what to do. So that's kind of why I don't want to get, in trouble for telling you to do something that I shouldn't have told you. So that's pretty much it. That's kind of why I don't even live stream either, and I don't show people the trades, because you can get in trouble for doing that, or yeah, they're gonna blame you, they're gonna report you. So you can get in a lot of trouble, of course. But if not doing any of that, then don't do it. So again, here we're rallying back up perfectly, finally having that bullish delivery. We respected this BISI, or a balanced price range here, pretty much. Rally back up. This inverse was kind of not respected. This was the mean threshold of this breaker block was respected and had a breakaway gap, but eventually became a measuring gap since 50% was never hit near. So we were kind of near it. But again, BISI here formed, mitigation block forming. I want to see the standard deviation projection area be hit now. Boom, boom, 2.5. This liquidity up here, I'd rather see that hit. Bro, check Euro USD. I already checked Euro USD and GPP. It's forming a market maker by model, but we're dropping back. So to me, it doesn't seem high probability. Just look at it. Look at that. Went up, then we're coming back down. Went up, now we're coming back down for GPP. Euro, kind of market maker by model, smart reversal there. See it happening. My dog's stretching right now. She's stretching. She's chilling. Chilling, bro. You chilling? Yeah. Forming up. But take out this buy side now. About to take out this one. So clear. Clear. Alright. Go to the back. Go. Yeah. Nope. Go over there. Go to sleep. Alright. nonetheless, here took our buy side. Now we're like, all right, do we want to continue up? Do we want to retrace? And that's what I'm seeing here. I want to see if this guy ever got hit. Let's hit the 4 level, 3.5 got hit, then we retraced. Now we're going back up. I need to use standard deviations more. I need to use my dealing ranges more. That's why I'm doing this too still. That's why I'm using them more, because I just know I need to use them more. Personally me, I don't use them as much as I need to. I don't even use them often at all. I really just use order flow, like the PD arrays. I don't use projections. I don't use dealing ranges at all. Main reason why, because I'm just reading order flow. You know, I'm reading the PD arrays. I'm seeing what's happening. I'm able to understand why and what's happening. But you know, of course, adding a little bit more of understanding by using those, I think you'll become a better trader. That's why I'm doing that. Retracing back now. Back down. First PD array hit. Second better be hit. It's my third down here. Not even that. That would be a proportional block. This right here. Or you can use this inverse actually. It aligns with that too. This will be my third PD array. I don't want to see us get below here. So yeah. Swept. Perfectly fine for retracement. Not a reversal here because we have more external liquidity up here. Mitigation block form here. Close above it. Rally up, come back down, rally up, come back down. I want to see order flow being respected. And institutional sponsorship on our side. That's really it. Nothing else that favors me more than that. But we didn't get that. ES. Very, very... I don't like how the candles form on ES on the 1 minute. That's why I'm not watching it. For NQ, I think it looks a lot more clear. Same with Dow Jones, it looks a lot more clear for right now, for today actually. Some days, you know, ES will have that better price action. Building the understanding, building the order flow, tape reading, knowing why and what you're looking for is very important. So we're respecting that mitigation block. It is overlapping with this high right here that we had a market structure shift upon. So that's kind of why it's in a very, very gravitational area. I want to see if we continue up though. If not, probably forming a market maker saw model here forming after taking out the liquidity. Then we drop. For me to have a little bit of more confirmation, probably closing below this. 2 close candles, and then probably this inversion for leg up, and then we're gonna see how this one gets reacted to. So probably this right here would have to be my change instead of delivery. Market maker someone might be forming, so that's really it. But I would want to see higher prices, of course, but nonetheless, if we do disrespect this down here, my third PD array, then I can see us being bearish, continuing lower. Probably aiming for some sell side since we did take out buy side here. Just chilling now, honestly. Probably gonna get that in a couple of seconds. Take this off, take this off, take this off. So we're gonna watch and see that. See me threshold of this now. If we make it inverse or not, that's a very important thing to me right now. So yeah, we're tapping up into it. I want to see if we start forming bearish prices here, or if we continue to go up and make this inverse, respect our original mitigation block right here. But nonetheless, we did close below it inside of the in the BISI here. Yeah, I'm watching this. All right, so we have 2 down close candles here. I'm gonna see if we can close above and respect bullish prices still. Nonetheless, I'm not fully bearish again until we close down here below this inversion for like that would be my 3 PD arrays. So yeah, so this mitigation block here was my first one. This is my second one. This down here, this low is the third one. So yeah, we didn't get below there, so order flow to me is still bullish, and I want to see this close above here for right now. So yeah, then we can use this as an inversion. We can tap back into it and then rally. If not, use a new mitigation block. I mean threshold, like that one right there. I'm assuming it's right there. It's a little bit lower, like right there, around there. Not too close, but kind of. And that's pretty much really it. I think order flow, we're still going to be bullish. We're going to continue up. And we did close above here. But again, I want to see strong displacement. I want to see a fair value upgraded around this high to confirm to me that we are likely to reach up here. But on a day like today, again, it just isn't high probability for us to get that strong delivery to the upside just yet. I think a slow delivery is not as quick with speed and energetic movement as most people would want it to be. I'm going to add this high back. See if we can get back into that. Get this one out. This one's right here like that. Close already. So just tape reading. Tape reading, bro. I never found tape reading enjoyable in my opinion until recently. I won't even lie. I never really did tape read. I did do it I think twice in October, and then for November I rarely did tape reading because I was always live streaming, and then I'd usually be taking trades behind the scenes, so that's kind of why. Never really just fully tape read. It could be demo trades, it could be funded account trades. I usually wasn't really just not taking a trade and tape reading. But today, you know, again, no trades. Just being completely honest with you, if I was taking a trade, I probably wouldn't even tell you. But if I was in a profit, of course I'll tell you. But if I was a loser, then I wouldn't tell you. But nonetheless, I'm being completely honest, didn't take any trades. There's no point of taking a trade either. I'd rather just tape read. And that's something too, you know, working on your discipline. That's something I'm working on, my discipline, to just sit in my hands, preserve my capital, preserve my funded accounts. Because back then I would take those trades and not tape read because I didn't have a model. Now I have a model. Now I know what I'm looking for, and you know, set criterias of what and why I'm gonna trade. So that's kind of why, you know, building that discipline, building the understanding of why and when you're gonna enter and why. So that's pretty much it. Like the music's too loud, honestly. So I want to see us close above here. It's 2 down close candles. Continue higher. Have a market structure shift even further above here. Probably reaching the standard deviation area over here, and then reversing back down. So yeah. I'll probably see if I can tape read tomorrow. If tomorrow's like a really good movement day on the AM session for the indices or for forex pairs, I probably won't live stream. I've been trying to get into the Discord and talk to them more, but I just prefer privately trading. I don't know why. It's just something about that makes me feel a lot more comfortable. Yeah, just trading by yourself. I feel like, again, once you have everything down, I don't think you really need to communicate to a group or to anybody, because you already know what you're looking for and why, and you have enough data on if it works or not, you know, how much risk to reward you should be aiming for, where your stop loss placement should be, what time, what market, what days, even the economic calendar, you know, all these other things. So you don't really need to have a group. You don't really need to exchange ideas anymore, because you already know what you're looking for. And if your ideas don't align with theirs, then it gets really complicated there, you know. Again, we're using the mean threshold here kind of as an inverse, but we're respecting that buy side balance. So I want to see, you know, if we respect the mean threshold and we close above it, then to me that would seem like right there, that would seem like we're still bullish to me, because we still are. So yeah, just the delivery has been very, very weird in my opinion. And news is about to come. I mean, not news. Lunch is about to come up here at 12. So probably just stepping away after that and just calling it a day. PM session is probably not gonna be favorable. I'll skim through PM session. But if I don't find anything favorable, then I probably won't trade it either today. Probably won't even trade it at all today. AM session, nothing favorable. I mean, you can take these trades, but for me, nothing favorable at all, honestly. So yeah. You stuck, bro? Not moving? Yeah, I can see that happening. Yeah, it's stuck. GU is stuck too. Stuck. What is this? AMD right here. Accumulation, manipulation. Not enough strong distribution. Not enough. So no good trades permitted for me. No good trades. I'd rather tape read. But tape reading. Yeah, I need tape read, guys. If you don't tape read, you're never gonna know why. How to use the concepts correctly when you're not trading. You probably will, but if you tape read, you're gonna have a better understanding. Price action in the market you're looking at, so a lot more favorable. Again, we're having that strong delivery to the upside now. Beautiful. We're forming a fair value gap in there. I want to see us at least take this high out before lunch. If this one up here doesn't get taken out, I can see us, eventually taking it out later. Probably in a later day or probably tomorrow, if not. So we get another fair value gap form. That is another PDA right here that you can use. It's going to be your first PDA rate. The order block is going to be your second. And now this is your third one. So not this one, not this one, not this one. I'm gonna keep this here because it's overlapping. That one too. I need to do some breath work. I really need to. This is my first PDA rate. Don't want to see us get near that low. Second order block. Don't get near that low. And then the inverse too again. So it kind of aligns perfectly. So this could be your first. This could be your second, like the discounted of the side right here. I mean, of the premium side. And then this inverse. Don't want to see that get closed below. So yeah, pretty much really it. Nice delivery to the upside here. Want to see us continue. Again, just how we're getting there is very slow. Very slow delivery. Very boring. Honestly, man. Hitting the fair value gap. That is a little institutional order flow entry drill. If we start pumping up right here. But if we don't get that, then of course, not institutional order flow entry drill, since we're not pushing up. I want to start using the immediate rebalance more. I feel like that's one of the most underrated things, the immediate rebalance. But I can never find where to use it. Probably this right here would be the best. But what about right here? No. I don't want to see. I want to see like 2 candle formation, not after after the candle's already formed. That's like, to me, that mitigation block or a breaker. Like where would it be ideal? Let's see. Where would it be an immediate rebalance ideal? Like right here, kind of. But I would prefer this candle to be right here, and then we tap back into it, then we drop. That's what I want to use more. I feel like that's very powerful. Again, we're about to reach buy side here. Let's see, my boy Chino, he's typing right now. The only few decent inversion flag up so far, not to mention since we're literally just chopping around the 60-point range, is relatively go. Obviously, soup. Finally broke out equilibrium in the macro, but I don't trade soup, so I don't really care about too much. That was the macro right here, right? 10.52, 11.10. And we did that macro swept liquidity. Perfect delivery, honestly. It's not bad. Swept the lows. And then we continued higher. Swipe. I said swipe. That's where we swept. Damn, I split sweep. Bro, what is wrong with my typing today? I swept the lows. Swept the lows. And the macro investment target area for upside right now. I'm gonna go screenshot my chart. Put it up in the Discord. 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 You play Discord. Yeah, I'm gonna close Discord because I don't want to. I don't want to have that open. Discord. All right, right here, 4 value gap with mitigation block. Another PD ray forming. I don't think we're gonna have to need this one anymore. So we did sweep these highs too. Mitigation block there. Very, very strong delivery here now that's coming in. Very beautiful from price action. Very beautiful, baby. Very beautiful. Come on, let's go. Come on, keep it up. Let's see if I really up there for him. Right there, right? Overlapping order block with a fair value gap. That is a strong price delivery. I want to see a hold. Hold. We have 1 PD array, 2 PD arrays, 3 PD arrays. I don't want to see this come back down to this third one. Not even to this one. Overlapping arrays. Want to see this continue up. Continue, take this out. Reach my standard deviation area. Perfect delivery. Beautiful. Beautiful, beautiful, beautiful. Today, honestly, we could have got this market maker bomb. I won't even lie. It's very hard to catch it though on a day like today, but nonetheless, could have caught it. I personally would have probably entered after the inverse, ran up, profits, stop, break even, and then see, this inverse get respected. What this busy continue up? Then I probably would have been like, all right, hold on, let's enter. So yeah, and then that would be my entries, and then I would target again using order flow, PD arrays. I would probably wait for these targets to be hit, and then probably challenge the stop. Not even that, probably challenge the stop after having 3 PD arrays. I want to see if we can get that standard deviation area. So very slow delivery, honestly. I'm in my Discord. I'm looking at the model. I sent the chart. All right, another mitigation block forming. I feel like we're gonna get there before lunch. Maybe after, maybe during PM, and then we reverse during PM. For sure. So look at the order flows being respected. The bullish PD arrays, simple, sweet, nice. We're gonna get there, baby. We're gonna get there very, very soon. So yeah, it's a beautiful delivery to the upside. After this, not the sell side objective, in my opinion. Sell side to the curve was horrible, horrendous, but the buy side to the curve was very nice, honestly. I was really just like, I think this is where I would have problems or trouble when I was back then trading. I would try to catch a smart money reversal. All right, my smart money reversal right here, maybe right here. Boom, we get a changes to delivery, fair value up, breakaway gap, we form inverse, boom, I enter, stopped out. Again, enter right here, breakaway, change to delivery. We have a fair value up there, another fair value up, we enter, stopped out, and then boom, again and again. And the next thing you know, the funded account is down like 5% here. Last trade, we entered too early, stopped out. Trouble, boy. So yeah, that's where I would have trouble. Probably the smart reversal is usually where I would have trouble the most back then. Now, personally, I don't have too much trouble, but I still, it's very hard to have an ideal entry. That's why I like waiting for a little bit more confirmation of the smart mirror reversal. So everybody get there up there. Come on, let's get up there. Beautiful delivery to the upside. SPX, not so beautiful. NQ, beautiful. Dow Jones is still yet to get up here. It's lagging. I feel like it's gonna get there up there soon. Just house delivering is not ideal for me. 1150, 1110, 1050 to 1110. Yeah, took out sell side too. Changed in state. I feel like this one would have been a lot easier to trade, honestly, than NQ. Formed, changed in state of delivery, came back down. We had an order block there, retested it multiple times. What is this? Fair value gap with a mitigation block. We had this inverse too, and then came back down. Another mitigation block there formed. Right here, this one too got respected pretty nicely. And then we rallied back up, formed a market structure shift, overlapping arrays. You want to see those get respected. So better reach the objective here. Nice buy side target, better be met. Again, just tape reading today, no trades. A beautiful day to tape read, understand why the market is going, where it's going to go, how to anticipate it, and what to use. Nothing but strong delivery. I gotta read today. I gotta finish this book. I still gotta take notes on chapter 4. I'm on chapter what? I finished chapter 4. Now I gotta take notes. I wrote my summary yesterday. It's only 6 chapters. How many pages is that? I'll take the book right now, guys. Pretty much just 200 pages around there. That's a review. Hold on, it's not even 200 pages. This is a summary guide. It ends at 189, so think I'm gonna review the summary guide though. It's not bad at all actually. Before I write my summary, close the book. So this book is called Stop Overthinking, 23 Techniques to Relieve Stress, Stop Negative Spirals, Declutter Your Mind, and Focus on the Present by Nick Trenton. Stop Overthinking by Nick Trenton. Overthinking is the biggest cause of unhappiness. Don't get stuck in a never-ending thought loop. Stay present and keep your mind off things that don't matter and never will. Stop Overthinking is a good book that understands what you've been through and exhausting situations you've put yourself into and how you get trapped in anxiety and stress. Acclaimed author Nick Trenton will walk you through the obstacles with detailed and proven techniques to help you rewire. I can't never get that word right. Rewire your brain, control your thoughts, and change your mental habits. What's more, the book will provide you scientific approaches to completely change the way you think and feel about yourself. So this book is good. I won't lie. It's a pretty good book for psychological aspects. You know, it you can kind of use this during trading, but it's gonna if you use the techniques, it's gonna reflect in your trading. You know, you're gonna become a better trader because you're overall having a better mentality. You know, you aren't stressful, or not stressful, but you're not overthinking. You know, you're not in the loop cycle like he talks about that gets nowhere. You calm down. You know, you're not too deep into your brain, but you have certain techniques to calm you down, and you're in a good, calm state of mind to take good trades. You know, you're not stressed about certain things, or you're not worried about certain things. You're not overthinking them. You know, if the trade's gonna work, trade's not gonna work. You know, you're overthinking a lot. It's a good book. You know, honestly, I would recommend it to anybody that is overthinking or has some sort of anxiety or something, or if you just want to get better at psychology. It's a good book, honestly. Another good book I would recommend was Trading the Zone. Trading the Zone was another good book in my opinion. It is kind of a game changer for your trading psychology, but I thought it would impact me more, but it didn't really. For me personally, it didn't impact me. I feel like this book impacted me more. The Stop Overthinking by Nick Trenton. I feel like it's just better approaches to like having scientific methods. Trading the Zone is really just about certain psychology aspects of like why the markets are the way they are and like how they affect you. Like I remember one quote was, every market experience is unique, so try to approach it from that perspective. What else? Have your edge. Have 20 trades where you can see if your edge plays out or not. Good traders know if the trade's gonna work out or not as soon as they enter. That's another psychological thing by Mark Douglas he talked about. What else? I forgot already because I didn't even read the book. I did read the book, but I didn't even take notes on the book. That's what I'm trying to say. All right, so we met the standard deviation area. That would be done for today right there. Met. That would be done. Boom. All right, boom. That's a good trade. I hit a 1 to 5 RR this morning on EU. You hit a 1 to 5 this morning. They're in AM session. That is crazy. Or if you're trading London, I can see London. AM session, I don't know. Not too bad. Delivery to the downside, honestly. So we met our target. I'm gonna go probably screenshot this. See if we can get the... Yep, I traded London after a sweep Asia highs. That's what I like to hear. Power 3. You funded or you demo trading, or you're on a funded account? Challenge. Or are you like a hedge fund trader, or are you like Alright, now we're having that reversal here. We met the NQ target pretty nicely. I'm gonna go show Shino. The trade was unfunded, currently trying out a 300k account. For what prop firm are you trying to try it out for? How much did you risk on that trade too? Because I think you would have been up already. Depends, you know, how much you risk. Show the trades. Targets. Target has been met. Now we can expect a reversal or retracement. And no spread on the futures funded accounts for sure. I raise 0.5. I never risk more than 1%. Why don't you risk 1%? You only raise 0.5. 0.5. You hit it 1 to 5. And if you didn't take any partials, that would be, how much would that be? Honestly, I don't even know how much that would be. That would be a 2.5 risk reward. So you hit 2.5 R. All right, we can expect a reversal or a retracement again from the 2.5 standard deviation area of this manipulation leg where we took out all the sell side. Want to see if order flow continues to be in bullish. We don't have too many PTA arrays here, but this would be a bullish PTA array if we continue up. Again, lunch has started. Watching to see if we come back down to here, respect these PTA arrays. This is going to be my first PTA array, the price and balance, mean threshold, and the order block, and then this order block too. So watching to see that. Now take 3 partials. All right. The reason that I only risk 0.5 is because I get too emotionally attached to the trade. That is very, very realistic for traders to go through. I have that sometimes too, I won't lie. Do you approach funded accounts with that, like 0.5 risk? Like every funded account, or usually just it's because of a, is it because of a 300K account? So I'm just saying I don't approach fundeds with 0.5 in evaluation phases. But if it's like a big account like that, then of course I would probably down the risk, but not have it too low to where it would take me a couple of trades to pass it. Especially if my model is presented, I usually risk a lot more because I already know it's going to work out. So well, 300K, I don't want to risk blowing it, but in like 8 to 50K, we'll risk 0.5 to 2%. Oh yeah. EU started moving. I like that. EU's moving now. Let's see. Nah, it's because when I approach fundeds now, back then I was more of a discretionary trader. I would kind of risk, different types of amounts. So I wasn't fully understanding what a good trade was like, what certain trades to take and risk for great setups. Now I have a model. It's a grade A setup, and I just risk a good amount when I see it presented. So model, it's basically MMXM with some other things, some other key elements that I have mixed in with there. So whenever I see that like all aligned together, I just take it. So I'll probably make a video. How much you risk? How much? It really depends on the funded account, but usually if it's like a valuation and it's below a 200K, I usually risk 2% or more. I mean 2%, not more. 2%, 2%. Because I'm trying to get there as soon as quickly as possible. But if it's a 200K account, I usually risk just 1%. 200K account or higher, I really just risk 1%. Depends on how euphoric I am that I risk more than 1%. But yeah, another challenge account, I just strictly risk 2%. Loss size calculator, mixed, boom, model presented, everything aligning together, all the confluences there, I take it. I'll probably make a video later on in life. Right now I'm just doing a higher time frame PD array trapped within my bias than turtle soup market structure shift. But I like the idea of market maker XM. Seems more logical. I mean, just trade what you're most comfortable with. I've been trading market maker X for like 3 months now. but I never really built my own personal model, so that's what I did. And now I have enough data to know, how to use it correctly and how much to risk. So yeah, so I'll probably upload a video after I'm finished with monk mode, which is like in March. I don't know. Probably not upload anything. I don't even know. I feel like just chilling. Probably until like I hit a mil funding, and then I'll probably be like, all right, here's my model, blah blah blah, this that. And even then, I don't even know if I would want to. Yeah, I noticed that when I try to force entry on a strat that I don't use, that I lose. Yeah, I mean I think that's typical, Yeah, no, mil funding, bro. Like a lot of people have mil funding. That's not that much. You get like 4 200k accounts, 5 200k accounts, some 300k in there. Past them, they have a mil funding. Some on trade copiers. I think that's a good enough target. And then you just start going into crypto and you chill. You become a crypto whale. If you're a good trader, you just trade crypto and you make a good percentage on your returns, and then you start just chilling. Only have 600k. And you're funded right now with 600k. That's not bad, that's like halfway. Yeah, crypto can change again a lot. Yeah. How old are you? 19. Alright, so we have a Sibi here, guys. Trading back into it. I want to see if we can get above here, but I don't think we will, so we have to mark this out. Looks like bearish PD arrays are forming. Pretty typical here on the 2.5 and -2, since I would have wanted us to take out this area of liquidity here, this buy side up here, but we never got up there. So to me, that seems like the reversal here might happen since we reach into that standard deviation area. So pretty typical. You're 14? How are you even trading, bro? Why are you, bro? At 14, I wasn't even trading. I was in playing video games with my friends. But the sooner the better, I guess. It really just depends on your situation too, though. That impacts you a lot more and makes you mature a lot more faster. Because I know Ayman Ghazi, he was like 14. He already had his social media marketing agency. He was like at 16, he dropped out. It's making like $1 million a month or $1 million a year. And then eventually at 17 and 18, he scaled up, making $1 million a month. And then he started hitting big numbers. My boy Ayman Ghazi, it's crazy, man. Crazy entrepreneur. Respectable man, honestly. All right, so we are getting above here. I would want to see us hold again, make that inverse, that Sibi, continue higher now, probably reaching this buy side objective. My parents opened me account, but never believed. Okay, hold on. My parents opened me an account, but never believed in me. Now I make more than them. All right. I don't know about making more than them, but how much you make per month? What is your consistent return or payouts you make? Dude, are you waiting for 6 sister entry? 6 sister entry on what? On Euro? On GU? What is a 6 sister? Do you know what a 6 sister entry is? What would be a good 6 sister entry right now on any market right now? You gotta tell me your analysis, bro. Tell me your analysis, and then I'll see, if it works out for me, and I'll go take the trade right now. Nah, not playing. I just won't take a trade. I won't take a trade today. It's tape reading day. To be honest, I've only been making 5 figures for the last 5 months, but not much to say. 5 figures in the last 5 months, bro. At 14, you would have to report to the IRS. You would have to pay taxes. But I don't know. This is like you're 14, not even age of 18 yet. You probably put it on their name. So are you really making it? Are you really making it, or is it them? That's a real question. Your parents making the money, or are you making the money? Exactly. Alright, so we have a BISI here formed. We have what? This right here. Boom, boom, boom. Rally up, take out this buy side here. I swear it's demo. It's not demo. It's hard to believe, bro. It's hard to believe. A lot of people, especially on the internet. I'm funded on 1 of 1. Not 1 of 1. NFC. Okay, yeah. It's hard. It's hard actually to believe. A lot of people are funded. They come into my comments, bro. Like people be, I don't know. They be talking like random. Like I don't believe majority of the stuff what people say. Like one guy was coming in here talking about, he was like a hedge fund trader, bro. No hedge fund trader would be on my live stream. To me, it just seems unrealistic in my opinion. That somebody's like a hedge fund entering my stream, talking to me, talking about ICT concepts, using them as a hedge fund trader. Like, I know damn well that's not true. You know, so like it's hard to believe somebody being a hedge fund trader and you're trading ICT concepts, bro. I'm not even gonna lie. So, all right, so we got another buy side imbalance here forming. I just want to see this buy side target be met. That's all I'm waiting for. Check London Open strategy, bro. Bro, check London Open. London Open. I don't even trade London Open. I'm not even a London trader. I'm a New York trader. I've seen a lot of AMD London setups all the time, but I just don't take them because I'm not a London trader. It's all hindsight to me, honestly, especially with AMD. It's like pointless. I'll never be a London trader, so probably if I ever move to like Dubai or something, I'll probably be a London trader. Even then, I'll probably want to trade New York too, so not ideal for me. So Puerto Rico seems ideal. 100% payouts. Then you hate 1 of 1? Not really. I don't hate 1 of 1 funding, but it's just too new. I don't like new prop firms. I like having a prop firm that's like over a year with experience, especially after what happened in my Forex fund. So on 15 and 20 days though, that's not bad. Honestly, the setup this morning was very good. It was above the opening price and ran into a 4-hour fairly out, while this sweeping Asia highs for Euro USD. Yeah, it doesn't seem bad. It doesn't seem like a bad setup. It's just showing a fun drill. We tap back into that. Not that one. It's just showing a fun drill. We tap back into that. Now we want to see this high again become a market structural sheaf, and then eventually what mitigation block form. If not, then of course the 2 down close candles here for close as a bearish one. I can only trade London because I got school. Are you a London trader? Are you an EU trader, or are you a New York trader? EU, yeah, that makes sense. That makes a lot of sense. Why are you trading EU too? A lot of New York traders don't trade Forex. They trade just indices. Some trade the Forex prop firms, but majority have been switching to indices. So I trade both. I like usually, this is my highest win rate on all of them. So all these markets here that I have in my main. So that's what I'm watching. Other ones I usually chart them up, tape read them too. But these I want to tape read because no trades today. Tape reading day, economic calendar. Again, no news. Just no high probability setups forming with delivery of energetic displacement that I like. Close the saw breaker. They got disrespected. It's on the 1 hour Sibi. Sure, they get there. Will probably never be hit. You plan to move to Puerto Rico? Yeah, Puerto Rico. Eventually, probably. Like I'm too young right now. Probably like when I'm 21. Then I can start drinking. Nah, probably not. That's haram, guys. I don't drink. It's haram. But yeah, we see TGR, bro. I'm not even worried about TGR, to be honest. There's like other people in Puerto Rico, bro, that one of them that I, of course, TGR is like an idol, of course, not an idol, but like he's someone I want to meet, of course, or a trader, but someone that's more important to him than me, or I mean, someone that's more important than him to me is Luke Belmar, for sure. Luke OP. Definitely want to meet him in Puerto Rico one day. I think Luke impacted my life more than TJR, Tyler, or whatever. Tyler's so good. You know, he put me on SMC. He put me on ICT concepts. I remember I watched his channel when, like, it was first being made, bro. I remember, like, he barely had 1K subs. I was watching his videos on YouTube and of course TikTok. And then he put me on to ICT and SMC at first, like the two first. I remember, bro. Like, I remember it was like back of my head, like it was yesterday type stuff. On TikTok, SMC videos. This is how I made $2,000 trading today. You know, in his apartment with his MacBook and Boogie. And showing a day in the life his vlog, and then just watching those videos. So yeah, I like TGR. He's pretty cool. Yeah, Luke is incredibly smart. His insight is crazy. Yeah, I'm gonna join Capital Club. Join Capital Club soon. Sprint TGR. Yeah, I like TGR. He's still cool, but I feel like he's just doing his own thing now, really. I mean, it's good to learn from him, but if you want to evolve, you gotta go watch ICT and go dissect his content, because you don't want to limit yourself, or if you feel like you don't have enough of an edge, then go watch ICT. I'm getting caught up. I'm looking at my phone. All right, so we have more delivery here. We have what? 2 down close candles, buy side imbalance. We met our buy side target up here, so I want to see if we start having that reversal now on NQ here. So that's all I'm watching. So we can see a market maker sell model here for him. Take out all this low resistance liquidity, expansion lower, probably during PM session. Right now AM session is going to drop after PM session. Maybe not, because tomorrow's not even FOMC though, so probably we could see that drop. I gotta go back test. I'll see you later. You better go back test? Why are you back testing? What are you gonna go back test? Your model? Your trading strategy? But I haven't back tested since like the summertime. I don't back test anymore. I mean, I used to when I was trying to find a good model to trade, but I think I was trading like everything. Strong back testing? I mean, the markets are open. I would rather tape read. I would rather just like look at what the market is doing right now and try to find out why and what's it doing. It gives me a better edge. I mean, backtesting, it depends on how you backtest. You can backtest like hindsight like this, or you can go back, use replay mode or whatever, I guess. I mean, if you have a model and like you're already trading that model, I don't think you need a backtest. I mean, you can to get more data, but you know, if you already have enough information, you don't need to backtest. That's how I view it, because I already have plenty of trades. I already know what to look for, when to look for. If not, then I just tape read. Tape read, see if the model is presented while tape reading. Don't take anything, just view it. I was back, but I think the last time I back tested was August, or I think October. I think that was a lot. I think I back tested sometime in September. But the last time I fully back tested, like probably over like 20 trades, was probably August. September, probably like 5 trades back tested. October, probably like 10. And I was just trying out like different models. I was trying out the unicorn, OTE, there's a lot of other stuff. I mean, I was thinking that I have a good strat. I'm consistent with it, so kind of useless. So you're gonna go back test with your strategy even more, even though you already have a good consistent one. Oh, unicorn is good. Yeah, unicorn is really good. So unicorn right here, you see it? Swept. Even right here is unicorn. Swept. Barely got there. Should I stop? Nah, you should keep doing what you want to do, man. Don't let me influence you. I think that's the one thing a lot of people need to learn is don't let other people influence you. I'm just saying from my personal experience, I don't backtest anymore. I'd rather not backtest. I'd rather tape read. If not, I'll just go review my trades. Yeah. If you want to backtest, you want to continue to get better with your strategy. Let that happen through your experience. If backtesting works for you, by all means, continue to do it. I don't really backtest anymore. I'd rather just tape read, not even demo trade anymore. Just tape read, wait for my model to be presented. If not tape read. Yeah, bro. Backtesting boosts our confidence level, bro. Yeah, backtesting. Backtesting does. I think it does boost you. It makes you a lot more prone to what you're looking for. Let's see if GU reached that. No, still it's not reached that standard deviation area. So I'm still not watching these until we reach that standard deviation area. I'm not gonna watch it. I'm watching this. I'm watching this one now here. I want to see this area be met soon, and then this one. See you later. I'll be back soon. I'll probably end the stream probably right around. I don't know when. Probably like soon. I probably won't continue streaming. I'll probably stream next week. Let me see the economic calendar for next week. I usually only streams on. Yeah, I'll probably stream tomorrow, next week, Tuesday, and then Wednesday, and then Friday. I only stream when there's no news. It's probably next week. There's no news next week, so I'm probably just gonna tape read. And then probably, yeah, that's it for this whole week. I'm probably not gonna stream because I like streaming only when there's no news, and just because I know that's gonna be a tape reading day, no volatility or no injection of news, so I'd just rather tape read. I'll probably end the stream. Where's a macro? Let's see where a macro would be. Macro's not gonna be all the way over here. The 1210 already ended, right? Yeah, we already ended that. Damn. Let's see, we disrespect that. Bullish PD arrays are still intact. No standard deviation, no manipulation lag right now. Damn, all these bullish PD arrays held. Do you have a WhatsApp? Nah, only have a Discord group. Even then, I probably not even. I don't even text in the Discord group anymore. I'm just trading privately. I think trading privately. Plus, I'm on a monk mode. I got other things to do, bro. So, I try to text a group here and there what I'm looking at, like for gold or silver. I mean, I was looking at silver. Perfect clear example here would be daily time frame. Sell center balance was being hit, but it never transpired. Market structure shift, fair value gap never formed there, so no good trades here for this one. Another market I was looking at was over here. Was it GPBAUD? Yeah, it was this one, I think. Weekly sell center balance, swept liquidity, daily busy holding. I want to see that become inverse or 4-hour market structure shift. We get that. Then we have sell center balance. Never. I guess we tapped up into it. Then we start dropping. Target the lows. Let's call all this out. GPB, GPY. Really good movement here, honestly. Inversed. Daily busy. 4-hour lows being swept. Buy side. We're inside of a range here. Very good. For oil though, I think oil was one of those where I was like, all right, I can see it. I can see it. You can see this dropping all the way down here, all the way. Why monthly? Look, monthly we have a SIBI, monthly SIBI for both. For both of them, what do you look for now? You look for displacement. You look for displacement lower. I can see that very, very much happening sooner or later, probably next month. I'm going to be looking for shorts all the way down here. It's going to be a swing trade. It's going to be a very long swing trade because the market delivery isn't favorable at all for gold or for silver. I mean, for oil. So, going to be watching that. Nonetheless, look at the monthly candle. We're still inside of that. Still inside of that. I want to see how we close, though. That's very important. So, we close inside of it, and then we drop. So, yeah. That's really it. I would show you guys crypto. What I'm watching on cryptos. Crypto altcoins. Which was my altcoin I was watching? Tia, my boy 2C was in the Discord talking about Tia, man. He called this out. He called this out right here. Look at that. That is a beautiful return in my opinion, bro. He called this out. Beautiful. Look at that, bro. That is 20%. 27%. God damn. God damn. That's 27x right there, boys. 27x. Where you from? I'm from the US. The USA. I'm from a republic state. I'm a Republican. All right, now here though we have our retracement happen again. So either retracement or reversal. What happened? Retracement. We had a retracement, then we went higher. Beautiful. I called this all out from start of right here. I already have my targets. I already watched order flow. I know what I'm looking at. Beautiful. But that means what? We're aiming for something new. Aiming for a target in here. What was the target? Oof, buy side right there. All this right here. This high right here. Very, very, very high probability we get there. And then we drop. If not, then this one up here. Then we get there. Then we drop. That's near 3.5. So again, we can reach all the way up there during lunch. We're gonna get there during lunch. That's how you know something's up. That's how you know this market day isn't good. We're going there through lunch, bro. Through lunch. I have been seeing that a lot more though. I've been seeing us respect lunch a lot more recently, and to me that's kind of been throwing me off. But I'm gonna take it. I'm gonna take it. Beautiful delivery to the upside. Again, we're watching all this tape, reading this. Market maker X model. But I'm gonna go here. I'm gonna end the stream here. Probably won't stream. Probably till next week. So I'm done tape reading. I'm gonna go eat. I'm gonna go use the restroom. I'm gonna take a shit. I'm gonna go read. And I'm gonna go journal. I'm gonna go meditate. I'm gonna go do all these things. I'm gonna go ground. I'm gonna go fast. I'm gonna go do some breath work, and I'll catch y'all later. So that is pretty much it. Review the stream if you don't know how I'm trading, or if you don't want to know how I'm trading. Review. Take notes. Did a lot today, and I showed you a lot in the beginning, but now I'm kind of burning out. I won't lie. So that's kind of why I'm I gotta go. So yeah, I'm kind of burning out. I'm kind of tired. I need my energy replenished. You can't focus for more. You need to take the Pomodoro technique. You need to take breaks. So that's one thing I'm about to do. I'm about to take a break, and I'm about to go do something else. So yeah, pretty much it. Peace. I can't stare at the screen anymore because I'm about to go crazy.